Imagine waking up one morning, making yourself a coffee and opening the post. There is a letter from your insurance provider. You assume it is the usual annual renewal, maybe a small hike of £50. You open the envelope and read the first line. You stop. You read it again. We regret to inform you that we can no longer offer insurance coverage for your property due to updated climate risk data. You think it is a mistake. You call another company. They tell you the same thing. You call a third. Declined. Suddenly, you feel a knot in your stomach. You call your mortgage lender to explain the situation, and they say the words that will ruin your life. Without buildings insurance, your mortgage is in default. We have the right to demand full repayment of the loan immediately. In a matter of 24 hours, your house, your biggest asset, your sanctuary, has gone from being worth £400,000 to being worth absolutely zero. You cannot sell it. You cannot mortgage it. You are trapped in a brick box that is financially toxic. And worst of all, you live on a hill. You have never seen a flood in your life. Your street has never flooded. But an algorithm in a server room in London has decided that you now live in the red zone. Welcome to the silent scandal that is about to hit the UK housing market in 2026. They call it the flood Re Exclusion. Millions of British homeowners are living in houses that, on paper, are already uninsurable, but they don't know it yet. Insurers are updating their risk maps using new artificial intelligence climate models that predict flooding not based on history, but on future projections of extreme rainfall. Houses that have been dry for 100 years are being marked as high risk. And if your house falls into this new category, and it was built after 2009, you are on your own. The government will not help you. The insurers will not touch you. And your equity will evaporate overnight. In this video, I'm going to expose the secret map that insurers don't want you to see. I'm going to explain why the deadline of January 1st, 2009, is the most dangerous date in British housing history. I will reveal how the Flood Re scheme, which was supposed to save you, actually has an expiration date that will leave millions of families drowning in debt. And I will show you why, even if you live in a third-floor apartment, you are not safe from this financial crisis. You need to watch this video until the very last second. Do not skip a single chapter, because in the second half of this video, I am going to give you the flood survival kit. I am going to reveal the exact tool hidden on a government website that allows you to see if your property has been secretly marked on the new 2026 map before the cancellation letter arrives. I will teach you the resilience trick, a series of specific, certified renovations that can legally force insurers to give you coverage, even if you are in red zone. And I will explain the Cession Clause you must put in any purchase contract if you are thinking of buying a house this year, to avoid buying an asset that is worth zero. If you leave before the end, you are playing Russian roulette with your wealth. Stick around, because what you are about to learn in the next 20 minutes could save you from total bankruptcy. Before we dive into this aquatic nightmare, I have a huge favour to ask. The insurance industry spends millions on lobbying to keep this information out of the headlines. They don't want you to know they are rewriting the rules of the game. We are the only channel digging into the technical documents to bring you the truth. Please, hit that subscribe button and turn on the notification bell. It takes 2 seconds. It is totally free, but it helps us beat the algorithm and warn more families before it is too late. Thank you. Now, let's talk about why your house might be about to sink financially. To understand the magnitude of this trap, we first have to understand what Flood Re is. A few years ago, the UK faced a crisis. Floods were so frequent that insurers threatened to stop insuring millions of homes. The government panicked. If houses don't have insurance, they can't have mortgages. If there are no mortgages, the housing market collapses and the economy sinks. So they created a temporary patch called Flood Re. It is a reinsurance fund backed by the government. Basically, it works like this. All insurance companies pay a levy into this fund. When you go to insure your house in a high-risk area, your insurer charges you a normal price, but in reality, they pass the risk to Flood Re. If your house floods, the government pays. This keeps premiums artificially low and allows people to keep buying and selling houses in flood zones. Sounds great, right? It is a safety net. But here is the deadly trap that no one mentions. Flood Re has draconian conditions and, most importantly, it has a soliciting death date. The first and most brutal condition is the rule of 2009. If your house was built after January 1st, 2009, you are not eligible for Flood Re 0. Nothing. The government decided this to disincentivize developers from building on floodplains, but developers kept building anyway because councils needed to meet housing targets. So now we have entire estates built in 2015, 2020 or 2025 that are situated in risk zones. While the climate was stable, private insurers covered these houses. But now, with the new 2026 climate models, insurers are looking at these modern houses and saying, too much risk. And since Flood Re doesn't cover our losses on these new builds, we won't insure them. This has created a two-tier market. You have the old Victorian house by the river that is covered by the government, and you have the modern three-bedroom house next door, built in 2012, that is completely uninsurable. Imagine being the owner of that modern house. You bought it for £500,000. You have a mortgage of £400,000, and suddenly you discover your property is a stranded asset. No one will buy it from you because no bank will give them a mortgage without insurance. You are trapped paying a huge debt for a house that is worth nothing. But the crisis is expanding. The new flood map of 2026 is not just about rivers and coasts. It is about surface water flooding. This is what terrifies the experts. Due to climate change, we are seeing sudden torrential rains where a month's worth of rain falls in an hour. The Victorian drainage systems of London, Manchester, or Birmingham cannot cope. The water doesn't come from an overflowing river. It comes from the sky and the tarmac that doesn't drain. This means you can live at the top of a hill, miles from any river, but if your street is paved and the drains are old, your house is now high risk. Insurers are using laser mapping technology and satellite data to predict where this water will pool. They have updated their loss models for 2026. And millions of properties that were previously in the green zone, low risk, have been quietly moved to the red zone, high risk. You don't receive a notification of the change. There is no letter from the council. You only find out when you try to renew your insurance or when you try to sell your house and the buyer's solicitor does an environmental search and finds the black label. Let's talk about flood excesses. Even if you manage to find an insurer willing to cover you outside of Flood Re, the conditions can be abusive. We are seeing cases where the insurer says, OK, we will insure the house for £1,000 a year, but your flood excess is £25,000. What does this mean? It means if your kitchen floods and causes £20,000 in damage, the insurance pays zero. You pay everything. They only pay if the house is totally destroyed. For practical purposes, you have no insurance. And the most dangerous part is that many mortgage lenders are starting to reject policies with such high excesses. If your bank reviews your policy and sees an excess of £25,000, they can say it does not meet their lending criteria and declare you in breach of mortgage conditions. And let's not forget the end date of Flood Re. The scheme was designed to last 25 years. It officially ends in 2039. It might seem far away, but in mortgage terms, it is tomorrow. If you buy a house today with a 25-year mortgage, your mortgage will last longer than the insurance protecting the house. As we get closer to 2039, banks will start to get nervous. They know that the moment Flood Re disappears, premiums for millions of homes will skyrocket to £10,000 or £20,000 a year, making them unaffordable. The value of these properties will start to fall long before 2039. The market will discount the future risk. We could see a value drop of 20 or 30% in flood-redependent properties starting from 2030. You are buying a ticking time bomb. There is another sinister aspect: mandatory co-insurance. Some insurers are starting to demand that homeowners install flood resistance measures at their own expense before offering coverage. We are talking about flood-proof doors, non-return valves in toilets, concrete floors, raised electrical sockets. This can cost between £15,000 and £40,000. If you don't have that liquid cash, there is no insurance. It is a brutal barrier to entry that is pushing working-class families out of their own homes. The impact on tenants is also devastating. If you are a landlord and your property becomes uninsurable, you are breaching your buy-to-let mortgage. Many landlords will be forced to sell for cash to vulture funds at a massive discount, or simply evict tenants and leave the property empty because the liability risk is too high. This will further reduce the rental stock and skyrocket prices. But perhaps the most frustrating part is the lack of transparency. Insurers share a database called the Claims and Underwriting Exchange, CUE. If you make a query about flooding, even if you don't file a claim, that gets recorded. If you call your insurer and ask, "Would I be covered if there was a flood?" you have just marked your file. The next time you try to renew, the algorithm will see that inquiry and interpret it as higher risk or a sign that you know something they don't. I have seen premiums double just because of an innocent phone call. The government knows this is a crisis. They know Flood Re is a patch that is peeling off, but they don't have the money to build the massive flood defences needed to protect these new risk zones. So they are letting the market do the dirty work. They are letting insurers raise prices and exclude properties to signal to the market where people shouldn't live. You are the collateral damage of this policy. Your house is the sacrifice needed to correct the market. It is vital you understand that the flood risk label is like a virus for your property. Once it enters the digital system, it infects everything. It affects resale value. It affects the ability to remortgage. It affects even your credit rating indirectly. And estate agents are not obliged to explicitly tell you this house will be uninsurable in 2026. They will tell you it has never flooded, and that might be true. But the past no longer predicts the future. The insurer's AI model doesn't look at the past, it looks at next year's rainfall simulation. And in that simulation, your living room is underwater. But knowledge without action is just anxiety. You are not helpless. The insurance algorithm is powerful, but it is not perfect. It makes mistakes. It makes generalizations. And if you know how to exploit those mistakes, you can save your property's value. Let's start with your primary weapon, the SETS, Independent Flood Risk Assessment. Most insurers use broad brush data. If your postcode is flagged, you are flagged. They don't care if your house sits on a small ridge 2 meters higher than the street level. To them, you are just a dot in a blue zone. You need to prove them wrong. You can commission a specialist surveyor to conduct a site-specific flood risk assessment. This costs between £300 and £500. The surveyor will come to your house, measure the exact topographic levels, assess the drainage, and look at the physical defences. If this report proves that your specific floor level is above the predicted flood depth, you can send this official document to the insurance underwriter. We have seen cases where an uninsurable property was reinstated with a normal premium because the surveyor proved the water would flow around the house, not into it. Do not accept the computer's verdict. Challenge it with hard data. Now, let's talk about the build back, better scheme. This is a game changer that almost no one knows about. If you are lucky enough to be with an insurer that has signed up for this Flood Re initiative, and you do suffer a flood, you are entitled to an additional £10,000 on top of your repair claim. This money is specifically for property flood resilience, PFR measures. We are talking about replacing timber floors with polished concrete or tiles, raising electrical sockets up the walls, installing self-closing air bricks that seal shut when water hits them, installing flood-proof doors. These are not just repairs, they are upgrades. Why does this matter? Because a house with certified PFR measures is insurable on the open market. There are specialist brokers who only insure flood-resilient homes. If you can upgrade your home using the insurer's own money, you turn a liability into a fortress. When you sell, you don't say, "It flooded." You say, "It is a certified flood-resilient smart home." That changes the narrative completely. We also need to discuss the surface water strategy. If you are in a high-risk zone for surface water, flash floods, you need to take control of your own drainage. The council's drains will fail. Fact, you cannot rely on them. Look at your driveway. Is it paved? If it is, you are part of the problem and you are at risk. Consider replacing impermeable concrete with permeable block paving or gravel. This allows the water to soak into the ground instantly rather than pooling against your front door. It is a relatively cheap fix that insurers love. Install non-return valves on your waste pipes. One of the most horrific realities of flooding is not just rainwater, it is sewage backing up through your toilet. A £100 valve stops that nightmare instantly. Now, a warning for buyers. If you are looking at Rightmove or Zoopla right now, you are walking through a minefield. You need to know the red flag zones. Historically, we worried about rivers. Today, you need to worry about concrete jungles. Areas in North London, parts of Manchester, and sprawling new build estates built on clay soil are the new danger zones. Clay does not absorb water. It acts like a slide. If you buy a house at the bottom of a slope in a clay area, you are buying a swimming pool. Before you make an offer, do not just check the government flood map. Check the long-term flood risk service for surface water. It is a different map. Use it. If you see high risk for surface water, walk away. Do not let the estate agent talk you into it. Oh, it's just a puddle in the garden. No, it is uninsurable risk. And if you absolutely fall in love with a house in a risk zone, you must insert a Cession Clause or ensure your solicitor checks for insurability in the contract. You need a guarantee that the current owner can transfer their insurance policy to you, or proof that a new policy can be obtained at a normal rate. Do not exchange contracts until you have a quote in writing. I have seen buyers exchange, and then the week before completion, they try to get insurance and get rejected. They lose their deposit. They get sued. It is a financial catastrophe. Finally, we need to talk about the political end game. Why is this happening now? The government is slowly withdrawing from the business of protecting private property. They are shifting the cost of climate change onto you. By 2039, when Flood Re ends, they expect the market to have corrected. That means they expect millions of homes to be abandoned or demolished because they are too expensive to save. Do not be the person holding the bag when the music stops. Check your risk on the government site today. Challenge the map with a surveyor if you can. Upgrade your defences if you are staying. Sell now if you are in a hopeless zone and can still get insurance. The water is rising, both literally and financially. The only life raft you have is information. I want to know your situation. Has your insurance premium jumped recently? Have you been denied coverage? Or do you live in a new build that is already showing signs of drainage failure? Leave a comment below. We are building a community map of these shadow zones that the insurers won't publish. And please, if this video saved you from making a terrible investment, hit that like button. It helps us fight the algorithm and reach more homeowners. Make sure you are subscribed. In my next video, I am going to expose the EPC trap, why the new energy efficiency laws could make it illegal to rent out or sell your home by 2028 unless you spend £30,000 on upgrades. You cannot afford to miss that. Until then, stay dry, stay insured, and I will see you in the next one.